Good morning, everyone. You're watching the Indian Investors Forum. This channel is all about making Indian investments, the avenues available for Indian investors to make investments, and all the asset classes available to the Indian investors. Well, in the previous video, we discussed the different asset classes available to the Indian investors and the advantages and disadvantages of different asset classes and how an investor should build a diversified portfolio by investing in different asset classes to achieve consistent higher returns which beat inflation and also reduces the risk for the investor. Well, in yesterday's video, we discussed about what can be expected in the Indian markets. We had mentioned that the Indian stock indices will open with a positive bias, with 7700 being a good support for the Nifty, and the rupee will be relatively stable as well, and that's what happened yesterday. Well, in today's video, we are going to be discussing the major headlines and price movements which happened yesterday in the Indian and global markets and what can be expected in Indian markets today. Well, let's start with the major headlines for yesterday. Number 1. European Central Bank had its monetary policy meeting yesterday where they maintained status quo on the lending and deposit rates. The ECB also lowered its forecast for growth and inflation for 2016. The president of ECB, Mr. Mario Draghi, also added that the central bank is willing to act if further action is needed and said that the quantitative easing program that sees the central bank buy 60 billion euros worth of bonds every month could run beyond its original deadline of September of 2016, which was a very dovish statement. They also said that the ECB Governing Council has increased its issue share limit, which means that it allows the ECB to buy more of a single issue of bonds. The ECB can now hold 33% of an issue compared to 25% previously. The European markets reacted very positively to Mr. Draghi's comments and viewed the policy statements as very accommodative and dovish. Number 2. China has increased margin requirements for taking positions in the yuan market, as they had mentioned the same, that they will make it expensive for people to short the yuan versus the US dollar. Number 3. The Central Board of Direct Taxes in India today issued a circular informing the officials to put the MAT assessment procedures of FIIs on hold temporarily. After the government accepted the AP Shah panel's recommendations on MAT, the important thing to note here is that the assessments have been kept on hold temporarily and this could change in the near future. Number 4. Keki Mistry, Vice Chairman and CEO of HDFC Limited, said in an interview yesterday that the prices in high-end real estate market in Mumbai can correct going forward. Mr. Mistry also added that the medium to low-end income real estate would be relatively quite stable and there would not be much correction in those markets. Well, to be frank, we think that the entire real estate market in India is very well supplied currently with very little demand as well. And this has been the scenario since the 2008 financial crisis. So fundamentally, the prices can correct all over the country. But we will have to wait and watch whether the Reserve Bank of India allows the prices of real estate to correct in India. The reason being that if real estate prices start correcting, that could further increase the NPAs of all the Indian banks and that could have a very strong negative impact on the Indian economy. Number 5. The IMF said yesterday in Washington DC that the Federal Reserve, the central bank of USA, has room to hold off from rising rates for the moment amid a pretty bumpy global economic situation. This again confirms our view that the Federal Reserve will not raise interest rates in September as the US economy is still not strong enough to withstand rate hikes and wage growth is not picking up as per their expectations to increase inflation. And if you also add the recent yuan devaluation to the picture, inflation could stay lower for a longer period of time than expected. The ECB India meeting yesterday voiced the same concerns about low inflation as well. So the chances of Federal Reserve hiking interest rates on the September 17th meeting are currently only 30%. Well, now let's talk about the major price movements in the Indian financial markets yesterday. The Indian stock markets had a positive day yesterday and stopped the losing streak as the benchmark stock indices saw price gains of about 1.3% in yesterday's trading session. The Nifty gained about 106 points and closed at 7,823 points in yesterday's trading session. The Sensex gained about 311 points and closed at 25,765 points in yesterday's trading session. Most sectoral indices also saw big gains in yesterday's trading session, with real estate and metal stocks gaining the most, and pharma was the only sector which had a losing day. The market breadth was also positive yesterday, where 1,087 stocks saw price gains compared to 400 stocks which saw price declines, and 61 stocks were unchanged. The biggest gainers on the Nifty were metals, commodity stocks and real estate stocks, with Kane India leading the gaining stocks with a gain of about 5.8%, and the biggest loser on the Nifty was Idea Cellular with a price decline of about 3%. Now let's talk about the Indian currency. Well, the Indian rupee was quite stable in yesterday's trading session as it was following the positive sentiment in the stock markets and outperformed its emerging market currency peers, which were all trading with a negative bias. The rupee depreciated by 5% from the previous close and closed at 66 rupees and 24 paise versus the dollar. As we had mentioned in yesterday's video that there can be some amount of short-term strength in the Indian rupee due to the dollar selling by exporters. The strengthening of the yuan by the People's Bank of China will also have a positive impact on the rupee strength in the short term. And other global cues are also positive for the time being. The yield on the 10-year government securities was around 7.74% when those markets closed for trading yesterday. Well, in the commodity markets saw some mixed price action in yesterday's trading session. Gold lost about 249 rupees and closed at 26,380 rupees for 10 grams. Silver saw price gains of 61 rupees and closed at 34,789 rupees per kg. Crude oil saw a price gain of 30 rupees and closed at 3,064 rupees per barrel. Copper saw price gains of about 6 rupees and 15 paise and closed at 352 rupees and 10 paise per kg. Nickel gained about 2 rupees and 30 paise and closed at 660 rupees per kg. Lead lost about 60 paise and closed at 113 rupees and 20 paise per kg. Zinc lost about 80 paise and closed at 120 rupees and 20 paise per kg. Aluminium gained about 1 rupee and 50 paise and closed at 107 rupees and 60 paise per kg. Natural gas saw a price gain of 3 rupees and 30 paise and closed up at 180 rupees and 50 paise. So the trading action commodities yesterday was mixed, with copper and natural gas being the biggest gainer, which was following the global markets, and gold being the biggest loser in percentage terms. So these were the biggest headlines and market movements of 3rd of September 2015. Well, what can be expected from the markets today then? The Indian stock markets should most likely open flat to little positive bias in price action as indicated in SGX Nifty, which was up by about 10 points at the time of making this video. American and European stock markets closed higher overnight and Asian markets were also trading with a little positive bias. Overnight, Dow Jones Index gained about 23 points and closed at 16,375 points. The S&P 500 index gained about 2 points and closed at 1,951 points. The Nasdaq index lost about 16 points and closed at 4,733 points. The FTSE 100 index gained about 111 points and closed at 6,194 points. The DAX index gained about 270 points and closed at 10,318 points. The CAC 40 index gained about 99 points and closed at 4,654 points. One important thing to remember today is that the American indices could not hold on to the gains it reached on an intraday basis, which is another sign of weak global investor sentiment. So the Indian stock indices can also face resistance at higher levels around 7,900 to 7,920. Even the orders from the Central Board of Direct Taxation for temporarily stopping the assessments of FII on minimum alternate tax issue can add a little bit of downward pressure on the Indian stock markets, as there can be some changes on that front. Even the Bank Nifty is still in bear market, and that index has to be watched closely for future market direction. But the dovish comments by ECB on extending QE if needed will provide support on the downside as well, and the interest rate hike by the Federal Reserve looks quite low currently, as the employment and wage growth data missed expectations and will keep inflation in the US below the targeted range of the Federal Reserve. Low inflation concerns were also highlighted by the ECB in their policy meeting yesterday, so that could very well happen in US as well. The Indian rupee should open with a positive bias today and should trade in a range of 65 rupees and 90 paise to 66 rupees and 50 paise in the spot market. The break of any of those levels can make way for more trending moves in the directions of the levels broken. The Indian rupee will have a positive bias as there will be some dollar selling by exporters in the short term, and the Chinese yuan has been stabilizing now, with the People's Bank of China appreciating the yuan, which has appreciated more than 1% from the lows it reached on 12th of August 2015. Since the depreciation of the yuan seems to have halted for the time being, that can also be a positive for the Indian rupee till this appreciation trend of the yuan continues. Another factor that would support rupee in today's trading is that the employment and wage growth data from the USA was not very positive, and that could delay the rate hikes from the Federal Reserve, and the September rate hike now looks unlikely. The chances of the Federal Reserve hiking rates on September 17th meeting is at about 30%. And the dovish comments by Mr. Mario Draghi, the president of ECB, will also have a positive effect, as it can lead to more capital inflows into India from European countries. Another important piece of data for today is non-farm payroll numbers for the month of August in US, which are expected to be not that strong as reported in previous months. The median expectations is of gains of 2,17,000 added employees for the month. Another important data to watch out for is average hourly earnings and participation rate of the workforce in US. And RBI will also release its forex reserves for the week ended 28th of August. The Nifty should trade in the range of 7,720 to 7,950. At levels of 7,720, buyers can be expected in the market, and at levels of 7,950 there could be some selling emerge as well. The break of any of those levels can make way for more trending moves in the direction of the levels broken, and chances are that Nifty will gap up higher on open. The opening could be around 7900 to 7920 levels, and we could have some selling emerge from there, as Nifty might not be able to sustain those high levels, as the same thing which happened with the American indices overnight. We feel that Nifty could have a relatively flat day, as traders could await all the important data points we mentioned above before taking a trading bet on the Nifty and other individual stocks. And the movement in Bank Nifty should also be watched closely for future market directions by investors, as it has entered a bear market couple of days back, and any weakness in Bank Nifty will lead to broader weakness among the Indian markets. The stocks to watch out for today are Bank of Baroda, ACC Cements, Ambuja Cements, IGL, Godrej Industries, Punjab National Bank, Reliance Communications, IDBI Bank, IDFC, Indian Overseas Bank, Cipla, NTPC, Hexaware, Power Grid, Wipro, Shriram Transport, Bosch, and Adani Enterprises. So everyone, this is my views about what we can expect in today's trading session in the Indian markets, and which stocks can have major price movements in the markets. Here at Indian Investors Forum, we are going to help you make the right choices for your investments, when you should invest in equities, real estate, bullion, fixed income, currencies, commodities, so on and so forth, and when you should rotate your investments in different asset classes, because investments is all about timing them correctly to get the best returns out of your portfolio. So please post your comments and queries below for future discussions. Also, please hit the like button, subscribe to my channel so you don't miss out on any of the future videos, and share this video with your friends and family so you can help them make the right investment choices in their life. Thank you for watching this video, and see you soon. Goodbye, take care, and happy investing.